Hello everyone, my name is Bhumika Jain and we'll do the company analysis of Jammu and Kashmir Bank today. So we'll know about the Jammu and Kashmir Bank. It's a commercial bank and it was incorporated in 1938. It's the oldest private sector bank in India. It is listed on NSE and BSE both. It caters the banking requirements of various customer segments, which includes business enterprises, employees of governments, semi-customer segments, and etc. It also offers a wide range of retail credit products, including home, personal, education, agricultural loans, trade credit, customer lendings, etc. We'll know about the major holding of in the market share. It covers the area of Union Territory of Jammu and Kashmir and Ladakh. If we talk about the area of Jammu and Kashmir, it has a major shareholding of 61.6%, and in the area of Ladakh, it covers 54.9%. The convener of Union Territory Level Bankers Committee is in a Union Territory of Jammu and Kashmir. It acts as a leading bank in 12 districts of Jammu and Kashmir. It has a huge account base of more than 1.98 crores on Pan India as on June 30. Then we know about the vision and mission of the company. Its vision is to be a socially empowering bank and endeavors to deliver innovative financial solutions to all the sections. Mission is to adopt the best standards of corporate governance and to be a lean, learning, and efficient banking organization. It wants to be a best-in-class financial intermediary, leveraging our digital and physical banking channels. Then we'll know about the market and the competition. In overall financial banks, it lies on the 8th number. It has HDFC Bank, ICICI Bank, Kotak Mahindra, Axis Bank, IndusInd Bank, IDIB Bank, and then it is Jammu and Kashmir Bank. It is a mid-capital company with a market capital of 13,000 crores. It has a revenue growth rate of 23%. It has a return on equity that's 13%. Return on equity is net profit upon shareholders' equity. So the net profit for this company is 1400 crores for up to this year, and the return on equity is that's 13%. Then we'll know about the in what segments does J&K Bank deal in. It provides depository services, then offer stock broking services, then it works in mutual funds. It is also a sponsor of J&K Grameen Bank, that's a regional rural bank. It has done partnerships with life insurance and non-life insurance companies, and the life insurance companies are PNB MetLife and Life Insurance Corporation of India, that's LIC, and the non-life insurance companies are Bajaj Allianz and IFFCO. Then we'll know about the financial aspects of the company. Bank is expected to grow its loan book by 13%, while the CAGR is expected to grow by 19%, and the net profit are expected to grow by 11%. The asset quality should improve further from here as on collection starts stabilizing. The company is trading at 0.64 times than to the financial 2025, which is expected. Resumption of dividend payout in financial 2023 after 7-year gap sends positive signals. But if we see the 5 years from now, the dividend of the company is decreasing. Then we know about the revenue trends. In the 5-year back from now, the revenue of company is increasing while the dividend is decreasing. Then the sales CAGR, that's 18% for the J&K Bank, which can be improved. Then the segment growth of the company has reported gross advances of rupees 88 crores. In terms of breakup, the personal loans contributed 37% of the total book, and the overall loan book is 15% year on year. The corporate loans account for 28% in the asset book. The yield on advances for the bank as a while stood 9.3% year on year. Then what are the risks and concerns which company can face in the further years? We'll talk about the 4 risks here. First is higher growth rate. Jammu and Kashmir Bank is the largest bank in the Jammu and Kashmir area and also the Ladakh region. Any economic slowdown or market share loss could impact the current growth rate of the bank. Lower than expected AUM growth or build-up in the NPAs are the key risks to the thesis. Then we'll jump to the risking interest factors. On the asset side, there is a concern of loan products being less affordable. This could impact the NIM on account of squeeze in spread and ultimately the profitability of the company. Then we'll talk about the asset quality concerns. It has inflated to 11% as of March 2023. Slower resolution of lower realization of the assets can have an impact on banks' profitability. Then are the low credit ratings. The bank has a rating of AA minus, or we can say AA negative from the BRICS ratings for bonds, and AA negative, or we can say AA stable from the CRISIL for FD. Okay, then we'll jump to the conclusion for the company. The management expects to cost the income ratio to decline further from the current level of 65%. The bank targets to reduce its GNPA ratio to 4.5% by the end of this year, or the financial year 2024. The bank expects to its deposit franchise to be supported by a record number of tourists visiting the Union Territory this year. Outside Jammu and Kashmir, the bank wishes to expand its retail lending, specifically home loans. The management is confident on digitalization drive that has been implemented in the bank and that can feel by the end of financial year 2024. The bank has set an ambitious target of earning 4,000 crores profit in the till the financial year 2028. The bank expects total recovery during financial year 2024 to around 1,500 crores, which should positively impact the P&L account by 350 to 400 crores. It has also guided for rupees 1,200 crores for recoveries in financial year 2025. So there is a buying recommendation in the band of rupees 73.5 to 75 and add more dips to the 65 to the 66.5 band. Thank you. That's all from my end.